Welcome to the Video CPA. I'm Michael Scott. I'm your host for this channel. Good to be with you today. I'm a certified public accountant and a certified management accountant. I have a master's degree in accounting and 45 years of experience. So today we're going to talk about the home office deduction and who qualifies for that and how to handle that. So let's go ahead and get started with this video. You'll notice the next two slides. The first one is our affiliate disclosure that says if you check in the comments section on a link and go buy something, we actually make money. And the second disclosure is our education disclosure that says, hey, we do our best to be accurate, but you need to study this out yourself, basically. Okay, let's get into it. What are the qualifications for an office in the home? Your first qualification is that it's got to be the space that you designate as your office in the home, and it doesn't have to be, there doesn't have to be walls that divide it or anything, but it's got to be used for exclusive use. You can't have personal use in there. You can't have recreational use or anything. It's got to be exclusive use. Now, can you put a television in there? The IRS would probably tell you no, but I've seen many big corporate offices that when I walk into it, they've got a television in the lobby. So I think I'd argue that one. But you certainly can't have a bed in there where you have somebody sleeping in there when you're not using it for an office. So exclusive use. Now, there are a couple of exceptions to that, and we're just going to mention them. We're not going to cover them in this video because it just takes too long to cover a lot of these things. So one of the exceptions, though, is storage of inventory or product samples. If you have storage of inventory or product samples in a given room, you can use that as a room for something else. It doesn't have to be exclusive use. Also, daycare facilities. Daycare facilities are handled a little bit different, not necessarily on a square footage basis, so the space does not have to be exclusively used either. And again, we're not going to talk about those in this video, but there will be a course in the Video CPA's targeted tax training that will discuss those things in more detail. So just be aware that those exceptions are out there. So exclusive use is only one of the requirements that you have to take an office in the home. Another requirement out there, and we're going to talk about 3 or 4 of these, it's got to be used for regular use. That means that particular area that you've designated for your trade or business needs to be used as a trade or business on a regular basis. Now, what regular means, it's not defined, but I would say that you have to use it a couple of times a week at least as part of your business activities. And this is almost a repeat of the last slide. The office or the space has to be used for trade or business, okay? If you're doing investments in there, unless you're a approved day trader that can qualify as a business, that's not going to work. Just doing investments and checking stock options and the stock market every day is not going to work. And rental property is not necessarily going to work unless you've got a rental business in there. So it's got to be a trader business. It's got to be qualified as a trader business. Next qualification. It's got to be your principal place of business, and this is a little bit different because if you, for example, have a place of business, if you're a plumber, for example, and you have a plumbing shop on Main Street of your hometown, and you operate out of that plumbing shop, but you also try to claim an office in the home, your principal place of business is not necessarily your office in the home. It's your plumbing shop on Main Street. So in that case, the IRS would say that the plumber cannot take the office in the home because it's not his principal place of business. On the other hand, they give you some exceptions here, and these exceptions are mostly for professionals, and I'm not even sure they work for professionals because they say, you know, if you physically meet clients on the premises, and the use of your home is substantial and integral to the conduct of your business, you can meet the office and the home requirements. Now, I'm a CPA. I've had an accounting office downtown and stuff. Do I ever meet people at my home? I think once or twice in 10 years, And it talks about doctors qualifying for this. Have you ever been to a doctor's home to see the doctor? So they let some people maybe qualify to have an office in the home, even though they may have a regular office someplace else. They may have one in the hospital, or they may have a clinic or something that they office in. So you got to be a little bit careful on this one. But certainly, if the office in the home is your only office, you don't have a outside office, then you will certainly qualify. So those are the items that you have to meet to be able to qualify for the office in the home. If you do qualify, there's two methods that you can use to compute what that office in the home deduction might be. The first one is a simplified method that they came out with maybe 6 or 7 years ago. And this one is a nice method. I mean, it doesn't require you to substantiate even any of your actual expenses, and there's no depreciation involved in this method. So it's a fairly nice method. All you do is multiply your square footage for that office in the home area times the specified rate or the prescribed rate for the year, and that gives you your office in the home deduction. Now, it is limited to offices of 300 feet or less. You cannot use it if it's over 300 feet. And so when you get that square footage of your home, you're basically taking the square footage of your office and dividing it by the square footage of your home to get the percentage that you would apply this prescribed rate to. Next method for calculating your home office expense, and this is a method that we use most of the time as CPAs, usually results in a little bit more of a deduction than maybe the simplified method. It does have some drawbacks, and we'll talk about those in a couple of minutes. So you calculate your area in the home just like you would under the simplified method. And then you gather your operating expenses, and you need to divide your operating expenses between those that are directly related to your home office and those that are indirectly related. So things like mortgage interest and real estate taxes, insurance, those type of things are indirectly related to the home office. If you actually paint the home office, that would be directly related. If you are doing something else directly to that home office, those are directly related items. So you divide those two out, and then you apply the expense ratio, or the square footage ratio, to those items that are indirectly related. If they're directly related, you can actually take those as a home office expense. But indirectly related expenses need to have the square footage percentage applied to them. Okay, so once you do that, you have got your expense portion of your deductions, and so then you have to look at the depreciation of your home. Now, if you don't own a home, it could be a rental property or something, and you would take a percentage of the rent in that case. But let's go ahead and take a look at some of the other expenses that you might incur then, other than just the mortgage interest and the taxes that I mentioned. All right, expenses like mortgage insurance premiums you probably don't think of, but if you are paying those things, you can deduct those as a home office expense. Insurance, for example, your home insurance can be deducted as a home office expense. Repairs, they could be direct or they could be indirect. Insurance is certainly indirect. Security system fees, if you have those on your house. Utilities and rent if the home is not owned, and there are probably other expenses too. Now, expenses like internet can probably be, you can probably justify taking more of a larger percentage of your internet than what your home office percentage might be. And so I would probably take 50% of that or something if you're actively working in your home office or using that internet a lot. Phone fees, I would not take the home office percentage on phone fees either. Now you need to be aware that the IRS says that your first landline coming into your house is not deductible. So if you've got a second business phone, that's all deductible, so take 100% of that. If you've got a cell phone, in addition to that first line coming into your house, take a good percentage of your cell phone if you're using that for business. Take an accurate percentage, but don't take just the percentage that your square footage calculation might yield. So keep that in mind when you're dealing with expenses that like internet and like phone fees, that type of thing. Next expense that you may not be aware of is depreciation. So if you own the home, you can take depreciation on that home, a portion of depreciation at least, that portion that is part of the square footage percentage. If you rent the home, certainly you're not going to get anything from rent. You just take a portion of the rent. But the simplified method, as I mentioned earlier, does not have a depreciation element. Well, let's just say the depreciation element is supposedly built into the rate each year that you use for the simplified method. But on the actual method, you need to take depreciation of your home. And that depreciation, we'll talk about that a little bit later, but it will be recaptured on the sale of your home, and so that's important to keep in mind, because the depreciation recapture will negate part of the benefit that you've gotten on the office in the home. The IRS form you're going to use for reporting your office in the home is going to be Form 8829, Expenses for Business Use of the Home. When you look at this form, it's used for rental property, it's used for Schedule C, small business property, and it's used for even farm property. So same form used for all of them. So part one is the calculation of your square footage percentage generally. If you've got a daycare facility, it's going to be different, but most people do not have daycare facilities. Okay, and then you figure your allocation deduction, and so here's where you have to put your expenses in on a direct basis or an indirect basis. If it's a direct basis, it's going to take the expense and apply it toward your office in the home. If it's indirect, it's going to apply the percentage to it. Or you will have to apply the percentage if you're doing it manually. If you're doing it with tax software, the tax software should calculate this form automatically and apply those percentages to it. And then down at the bottom, you've got the depreciation of your home. And so your tax software should calculate that as well. If it doesn't, you'll have to calculate it. And then you've got a carryover. So we'll talk about the carryover information in just a few minutes on the last slide that we go through. Most people that take an office in the home deduction aren't aware of the fact that you have to recapture the depreciation that you've taken for that home office over all the years that you've taken it. So if you've had that home office for 20 years, then there may be quite a bit of depreciation and has to be recaptured. And that's called an unrecaptured 1250 gain. We talked about it in some of our other videos on rental property and stuff. But that, when it's recaptured, has to be reported then on Form 4797, and you can entitle it Home Office Recapture or Home Office or anything like that, something close to it. List the amount of depreciation recapture, and then that should be carried forth to the front page of your 1040 so the tax can be applied to it. But it's going to be taxed as an unrecaptured 1250 gain. So under the simplified method, you don't have to worry about that, but under the actual expense method, you do have to recapture depreciation when you sell that house. I mentioned inventory storage and daycare facilities a little bit earlier. We're not going to talk about those. Those will be discussed in one of the courses of the video CPA's targeted tax training. So just be aware of that. And there's other things that we don't discuss in these videos because I can't make a video long enough to discuss all this stuff, or it would be several hours long. But things like a separate office that's not connected to your house, that will be discussed in the course and not in this video. So just be aware that there are other things that come in besides what we've got here. Last thing I want to talk about in this video is the gross income limitation. And just one thing you need to realize is if you don't have any gross income from the business that you're claiming this home office deduction on, you're not going to get a deduction, okay? Now there are several things. There's the real estate taxes and your mortgage interest are going to be deductible regardless of whether they're deductible on the for the home office. So if you don't have any income on your business, they're going to go over to Schedule A generally, or they can go over to Schedule A and be deducted on Schedule A. If you don't have enough to itemize, which is the case with many individuals since they raise the itemized deduction, well then those expenses will just be carried over with the other non-home related expenses like insurance expenses and repairs and maintenance of your home, utilities, that type of thing. But everything does get carried over. And so when you actually do sell the house, you will have a carryover possibly if you've had losses on your business that can be applied toward, it can be deducted at that time. So that's something to take into account as well when you have that home office. So let me just talk about a home office deduction a little bit. I've done a lot of them, and most home offices seem to come up with about a 7 to 10% percentage of the home. And that usually results in what I see, maybe a $700 to $800 or $900 deduction every year. And when you take that into account, you take into the account that you've got to have that form prepared if you're using a CPA or another tax preparer. And you take into account that there's recapture on the depreciation, so there's an additional form that has to be prepared there at the end. I'm just not sure you're getting that much on a home office deduction. So I continue to do them for people because people want them done, but as far as the actual benefit of a home office deduction, especially when you realize that you're going to be able to take your real estate taxes and your mortgage interest anyway, in most cases, which is the biggest part of the home office deduction, well then I don't think it pays off that much. Now, you do have to take into account that it does lower self-employment tax and stuff, so that's something. And if you can't itemize, well then if you're able to take a home office deduction, I would go ahead and encourage you to do it. But you need to think about it because the deductions aren't that fantastic on a home office deduction. Well, anyway, it's good to be with you. It's nice to have talked about the home office deduction. I hope that you understand this. If you need more information, go to www.thevideocpa.com and take one of the courses out there. We will have the home office deduction course out there probably in a couple of weeks. So again, thank you very much.